Coming up on Global Business, fewer big cities in China saw home price growth in July, but authorities say risks in the property market are diffusing. Eurozone GDP expands by 0.3% in the second quarter compared to Q1, spurred by a rebound in industrial production. And we'll explore how China is accelerating the development of its massive digital economy as a key technology conference kicks off over in southern China. And welcome everyone to Global Business here on CGTN. I'm Michael Wong in Beijing. Well, first up, Chinese Premier Li Qiang has stressed the importance of a precise and targeted macro policy in realizing the year's economic goals and promoting high-quality development. Li made the remarks at a plenary meeting of the State Council on Wednesday. Li said efforts should be made to expand domestic demand, build a modernized industrial system, and speed up the digital transformation of the manufacturing sector. Premier Li also emphasized that greater efforts should be made in promoting reform and opening up, stabilizing foreign trade, and encouraging greater international investment. The China's property market, where new home prices in first-tier cities remained stable over the past month, benefiting from minor increases observed here in Beijing and over in Shanghai. Official data released on Wednesday show that new home prices saw a slight decrease in second- and third-tier cities in July compared to the previous month. However, in a year-on-year comparison, major urban centers reported modest upticks in new home prices. Conversely, the scenario is less favorable for pre-owned homes, as their prices continue to decline nationwide at an accelerated pace. Well, July's home price data came right after China cut interest rates on two lending facilities, which can affect mortgages as well as developers' financing. Some analysts are now predicting that the benchmark one-year loan prime rate is also expected to drop this month, which could have an even bigger market impact. Zhang Zhixuan reports from Shanghai.
Construction started only 6 months ago, but by the end of next year, the 3 residential buildings and 21 villas here will be completed at Shanghai's Zhangjiang Science City. Though sales are not open yet, the reception center is already seeing 30 to 50 groups of clients a day during weekends. Even those from outside Shanghai are welcome just so they meet the local tax requirements.
My wife and I are from outside Shanghai, but we've been paying local social insurance for 5 years, and so we want to save some money and buy a new home. We just got married this year. We're looking for a small apartment for around 7 million yuan.
We have met the requirement for social insurance payments. And we just got married, so we want to buy a new home in Shanghai. We both work in Pudong, so we want an apartment here.
The company has 14 residential property projects under development, more than half of them intended for families looking to upgrade from homes they now own.
Take this project in Zhongjiang, for example. Since we opened our reception center at the end of May, we've welcomed more than 1,600 groups. People have been paying a lot of attention to it. Most of them are from the Pudong new area, families of 3. Most are buying for themselves and to trade up from where they're living now.
The company has been speeding up its delivery times. This June, its project in Shanghai's Kangqiao area made delivery to home buyers 3 months ahead of schedule. It was also the first housing development in the city to make simultaneous delivery of both apartments and their property ownership certificates too. A big saving on paperwork time for everyone. That efficiency has a lot to do with the faster financing that is now available.
In the past, our project loans usually required an application process that took 1.5 to 2 months. But recently, 2 of our projects in Zhaolu and Huinan applied for development loans, and they only took a month. We've been paying all our contractors on time according to the agreements. We are also paying workers' salaries to their accounts according to the requirements of the Shanghai government.
It's been a year since the Chinese government highlighted the need for timely deliveries of pre-sold homes to their owners. During the past year, financial institutions have been told to help developers with that by extending or adjusting loan repayments. Developers' loans maturing before December 31st, 2024 have been extended for another year. And this year, as the country's residential property market is undergoing some massive changes, such financial support is critical to helping the market hang on until hopefully the demand for home buying recovers.
In the first half of the year, especially the second quarter, housing sales data didn't perform well. But in the second half of the year, with the series of new policies, we expect the market will gradually turn better. And when the sales data improves, the liquidity will help the on-time delivery of pre-sold homes. And then if financial institutions see better sales figures, they may be willing to lend more money to developers.
The National Statistics Bureau last month released data showing that in the first half of this year, the completion area of residential properties rose almost 20% from a year ago. Zhao Shixuan, ICS for CGTN, Shanghai.
And China's National Bureau of Statistics believe that the existing challenges in the country's property market are temporary, and the newly introduced incentives are already yielding results. Over the past year, Chinese authorities have extended specialized loans to real estate developers, resulting in the resumption of construction for those who benefited from these loans. Consequently, a total of 1.65 million homes have so far been delivered to buyers. Local governments, including large cities such as Fuzhou and Xi'an, are contemplating even more lenient mortgage policies. As part of China's recent efforts to stimulate consumption, initiatives include subsidies aimed at residential building renovations and supportive measures for public housing construction. And China's aviation sector is on track to recovery in July. According to official data, the overall volume of passenger trips traveling by air rose 84% on a yearly basis to over 62 million last month. That's an increase of 5.3% compared to 2019. Meanwhile, a total of nearly 60 million passenger trips were transported on domestic flights. That's up 75% on year and 12% from pre-pandemic levels. International passenger flights are recovering too, with a total of 3 million passenger trips. That's more than 50% versus 2019. Now, thanks to rising summer holiday demand, there has been a huge rise in flight bookings and an increase in the number of flights to popular destinations. And in other headlines, we're tracking across China. An official report by the China Federation of Logistics and Purchasing said on Wednesday that over 70% of companies surveyed think the business environment is improving. Among them, enterprises engaged in waterway freight, air freight, and express have all expressed a high evaluation of the logistics business environment. China Customs rolled out 23 measures to boost the high-quality development of comprehensive bonded areas. The move aims to provide more policy support and streamline operational procedures. And an event promoting sustainable development has closed over in Huzhou, Zhejiang province. Over 22 local government bodies and enterprises inked deals worth 890 million yuan for low-carbon technology development, as well as green finance. It's still to come here on Global Business. Eurozone GDP expands by 0.3% in the second quarter compared to Q1, supported by a rebound in Eurozone industrial production.
We are all connected. Across borders, across continents, connected by ideas, a shared humanity. Stay connected.
To Europe, where the Eurozone economy has maintained steady growth in the second quarter, helped by a rebound in factory output. Wednesday's official data showed the single currency bloc's GDP for the April to June period gained both on year and on quarter. The pace held steady from the previous tally and has met expectations. Now, that partly resulted from a surprising rebound in the industrial sector, where production rose by 0.5%. That's much better compared to market estimates. Meanwhile, the labor market in the Eurozone also continued to recover, with the number of employed people up 0.2% in the second quarter, as expected. But it's not all positive and well over in Europe, because the core inflation rate in the United Kingdom failed to ease in July, echoing warnings by the Bank of England that the risks of long-lasting, high and entrenched inflation are beginning to take shape. Over in the Netherlands, second quarter GDP unexpectedly fell for the first time since the COVID-19 outbreak. And outside of Europe, the Central Bank of New Zealand held its benchmark cash rate steady to meet its inflation targets. Well, a number of European nations are welcoming the relaxation of China's travel restrictions and a recent decision to allow Chinese tour groups to resume overseas trips after a suspension due to COVID-19. Our Wang Siwen explains.
As one of the foremost contributors to international tourism, prior to the pandemic, more than 150 million Chinese tourists traveled overseas each year. The recent announcement that outbound group tours will once again be permitted to travel to nearly 140 countries marks a clear resurgence in the Chinese tourism industry. In the first half of this year alone, tourists from Chinese mainland have made over 40 million trips overseas. Global tourist markets expect more Chinese visitors to come back. The global tourism market is expecting and bracing for Chinese visitors to return. Turkish officials say they've been anticipating the news and can't wait to have Chinese visitors back in the country.
We are very happy to see at the end that Chinese tourists can go in groups to Turkey. Hopefully they'll be able to join the last part of their summer vacations and enjoy some good time in my country by this announcement.
Norway also considers China one of the most important sources of tourism in Asia.
We have been preparing for this day since the outbreak of the pandemic. In the past 3 years, we have done many things to promote how to travel like a local in Norway through different ways, such as short videos, live streamings, SoMe posts. The purpose of doing so is to tell travelers how to get the authentic experience when they are in Norway.
With more people ready to travel abroad and the number of travelers reaching new heights, international flights are working to meet the new pace in demand.
I have heard from many airlines now they are reconsidering to increase the weekly flight frequency and also relaunch some new flight routes in the near future.
Our first aim is to get to the number that we have reached in 2019, which was 500,000 Chinese tourists. That's the number that we passed. It was a good number, but still, I mean, hopefully with the new destinations that we will open to our Chinese friends, we'll be able to reach this 1 million tourist number, hopefully next year with China. So that's our aim.
With more Chinese tour groups now able to visit more countries, the world's biggest outbound tourism market is likely to play a key role as the global industry continues to recover from the pandemic. Wang Siwen, CGTN, Beijing.
Well, China's economic fundamentals are strong, and it will remain a growth driver for the global economy. The remarks came from China's Foreign Ministry spokesperson Wang Wenbin at a routine press conference. Take a listen.
经济恢复是一个波浪式发展、曲折式前进的过程。
There are, of course, some ups and downs in the process of China's post-pandemic economic recovery. The important thing is we are facing the problems, trying to solve them, and the results are yielding. We have rolled out new measures to boost consumer spending, private sector growth, as well as attracting foreign investment. We are confident that China will meet its GDP growth target this year and continue to be a driver of global economy in the long run.
继续为世界经济复苏和增长提供源源不断的动力。
Well, China and South Asian countries share a close economic and trade relation. A grand expo aiming to further bolster the ties kicked off over in Kunming, the capital city of southwest China's Yunnan province. Our Yang Jinghao has more.
It's the 7th edition of the China-South Asia Expo. Chinese Foreign Minister Wang Yi attended the opening ceremony on Wednesday morning. In a keynote speech, He proposed ways to enhance all-round bilateral cooperation.
We will also protect the legitimate rights and interests of foreign-owned enterprises in accordance with the law and create a market environment that treats everyone equally and competes fairly. Enterprises from South Asian countries are welcome to increase investment in China.
State leaders and government officials from several South and Southeast Asian countries were present. They agreed that a closer relationship would benefit both sides. Under the theme Solidarity and Coordination for Common Development, Nepal is acting as the theme country and Myanmar as the guest of honor.
I'm here at the exhibition area. The expo has attracted exhibitors from some 60 countries this year. Let's check out what special products are offered here.
Figures from the Ministry of Commerce show that in 2013, when the inaugural expo took place, the total trade volume between China and South Asia stood at under $100 billion. The figure has since nearly doubled, reaching around $200 billion in 2022. Many exhibitors say they are happy to seize the opportunity to explore new business prospects.
We do have a different kind of sapphires, star sapphires, cat size, and different kind of stones. It's all from Sri Lanka. So we are here. So we also want to make very good friendship with our Chinese partners, and we hope we can do more business in future, Sri Lanka and China.
This is my first time in my life in this city, Kunming, and this year I have just come here to observe the market, what actually happens here in China. And this year I have brought this paper necklace, paper earrings.
Apart from exotic products and local handicrafts, more than 10 pavilions showcase trendy goods and latest technologies from China spanning diverse sectors, from healthcare and modern agriculture to the digital economy and more. Yang Jinghao, CGTN, Kunming, Yunnan Province.
And in other corporate headlines we're tracking across China, e-commerce giant JD.com beats Wall Street estimates for second quarter revenue. That's all thanks to its strategy of attracting customers with lower-priced products aimed at the economic recovery. Tech giant Tencent's revenue rose 11% year-on-year in the second quarter, slightly missing forecasts as the pillar gaming business experienced weaker than expected growth. And battery technology leader CATL launching a fast-charging lithium iron phosphate battery. Mass production of this battery is expected within this year. And up next, here on Global Business. Investing in the future as a key technology conference kicks off in Guangdong Province. We'll take a closer look at how China is speeding up development of its massive digital economy.
Climate change, economic uncertainty, and food insecurity. As the world faces multiple challenges, heads of state of BRICS nations and 55 African countries meet in South Africa with a common goal to promote multilateralism and sustainable development. CGTN will bring you in-depth reports and comprehensive analysis on one of the largest gatherings of developing countries. BRICS Summit 2023. Building an inclusive world.
Well, the 2023 China Digital Economy Innovation Development Conference kicks off in Guangdong on Wednesday. Industrial digitalization, digital governance, and digital economy will take center stage during the three-day event. The conference invites experts, scholars, corporate executives, and industrial associations to address audiences on a wide range of topics. A report on the development of China's digital economy was unveiled on Wednesday by the China Academy of Information and Communications Technology. Now, that report saying industrial application of digital technology has witnessed rapid growth in the past 15 years here in China. Besides keynote speeches, the conference also includes booths for exhibitors to showcase cutting-edge technology. Meanwhile, Shanghai has issued an action plan to promote data-driven industrial innovation spanning 2023 to 2025. Now, that plan aims to form 1,000 quality data clusters, 500 leading data firms, and 1,000 data products by 2025. It also specifies a target of 50 billion yuan in terms of industrial output by 2025 as well. 30 trial programs will be carried out to promote public data sharing and lead the establishment as well as the perfection of management of public data. The government will invest in multiple landmark industrial clusters that open to the world. Funds will be invested in new submarine optical cables that connect Shanghai directly with East and Southeast Asian countries. In addition, a national new type internet exchange point, a web infrastructure, will be inaugurated during the 3-year period under that action plan. So for more on China's digital economy, I want to bring in Chen Jiahe, Chief Investment Officer at Novum RK Technologies. Jiahe, welcome. So the China Digital Economy Development Conference we were just reporting on, that conference, Jiahe, has a big focus on the construction of the infrastructure required to power the digital economy. So give us a sense in terms of where China stands relative to other major economies when it comes to digital economy infrastructure, because essentially we're talking about investing in the future of productivity here.
Hi, Michael. When we talk about the infrastructure of digital economy in China, regarding things like internet cable, 5G network, clouds, etc., currently China is standing in a very leading position compared with many other economies, not only developing economies we're talking about here, but also many mature economies. Take the mobile network, for example. Currently, there are about 99% of population in China covered by the 5G network. Another data shows that China's users of 5G network is counting about 60% of the world. Also, if we go out to check out the infrastructure of digital payment, we can see that there are terminals for digital payment almost everywhere. Now, I never take any cash or credit card when I go out, So the prosperity of digital economy in China is certainly built upon a very mature infrastructure.
Yeah. And Jiahe, of course, we know that China's domestic market, well, it certainly provides a powerful economies of scale effects that enable faster commercialization of digital innovation. So what other competitive advantages besides scale about China's digital economy stands out to you?
Well, there are at least 3 very obvious advantages. The first, as you said, the economies of scale. China is a large economy with 1.4 billion consumers. So the more investment made into the digital economy, the more output will be generated. The second is the so-called latecomers advantage, that compared with mature economies, China didn't have a strong traditional industry in the past. For example, China didn't have much supermarkets before the internet shopping, not that many takeaways before the online ordering of food. So it is relatively easy for China to grow its digital economy, and the investment return in this new economy will be higher. Therefore, there is more incentive to make investment here. Finally, the Chinese government is paying a lot of attention to the growing of digital economy, including many things like infrastructure investment, favorite policy, maintaining order in the market, anti-monopoly, etc. So these also helped the growing of the digital economy.
Right. And Jiahe, like you were mentioning, China is home to a world-leading mobile payments market. No need to carry cash or credit cards around that much anymore. What about other areas of fintech or blockchain? How do you see fintech reshaping China's financial services industry?
Well, the blockchain actually didn't do too much things here. Its efficiency has been proved as lower than the system that has a center, and its largest application, the cryptocurrency, has actually been banned in China, which has stopped many investors from losing money. On the other hand, the fintech has been working really well here. The financial industry has adopted many fintech stuff, like the quant funds have been growing rapidly in recent years. Almost all the financial activities in China are now made online. Banks are capable to operate with much less branches while having high efficiency. It is very easy to buy stock or fund or insurance from mobile apps. Meanwhile, many measures have also been taken to contain the potential damage that can be caused by fintech. For example, brokerage agencies have recently been banned from telling their clients about the estimation of fluctuation of mutual funds in the trading hours, which is an action taken to reduce the short-term trading.
And Jacko, let's then move to the real economy because we know China has a huge manufacturing sector. Robotics, intelligent manufacturing, these two will be absolutely key for the sector to remain competitive in the long term. Are factories here in China embracing digital technologies, you think, at a fast enough pace?
Yeah, I mean, manufacturers in China are now paying huge amount of attention to using technology in their production. Things like robots, AI manufacturing, cost-saving calculation program, etc. All these things have been used. There are many reasons behind this running toward more digital technology in the production. The salary in China is rising every year. In last year, the average salary in urban area increased by around 5% compared with a year ago. Meanwhile, the price of raw material is fluctuating, like oil, iron ore, etc. So running the factories with high efficiency became an important thing for factory owners. Meanwhile, the digital economy has been spreading so much in China that almost everyone is using these things every day. So factory owners just ask themselves, why don't we use similar things in our production? Meanwhile, the capital market is also spreading the information of the latest digital technology to factories. So all these things really help.
All right, Jia He, many thanks for your insights and thoughts. As always, Chen Jiahe, Chief Investment Officer at Novum Arcade Technologies. Thank you. And before we go, we want to show you a story that may sound like science fiction because researchers over at the National University of Singapore are trying to use AI technology to read patients' minds. Take a look.
It's nice to meet you. Can artificial intelligence read our minds? Researchers from National University of Singapore say they have developed technology that can do just that. AI research participant Li Ruiling is getting ready to jump into an MRI machine for a brain scan. It will allow a computer to, quote, read his thoughts and recreate the visuals he is looking at.
I'm also interested in what happened in my brain and what my brain can output and what I'm thinking. So I try to participate and to see what really happened on my brain.
Li is one of potentially up to 58 participants who are providing their brain scan datasets to researchers working on developing a mind-reading AI. The technique relies on scanning the brains of volunteers in a magnetic resonance imaging (MRI) machine, where they are exposed to 160,000 different images. The mind-reading AI called MindViz then associates the brain scans with the images and creates an individual AI model for each participant. The technology is not able to mind-read the general public yet. Unlike scenes from science fiction movies, this AI system is modeled to individual participants. And there are also the possible risks of the datasets being assessed without consent and the relative lack of legislations in AI research. Joan Helen Zhao is the Associate Professor at NUS Medicine.
The privacy concerns is the first important thing. And then people might be worried, right, whether the information we provided here might be accessed or shared without prior consent. So the thing to address this is we should have very strict guidelines, ethical and law in terms of how to protect the privacy.
Still, the scientists are excited about the possibilities of a mind-reading AI system. One of the lead researcher, Chen Zijiao, explains.
Say for some subject, some patient without motility, maybe we can help him to control their robots and their phone, communicate with others, just using their thoughts instead of speech if that person couldn't speak at that time.